Hello everybody and welcome back to my YouTube channel. Today we are going to be talking about a different topic, and I know it's after a pretty decent period of time which we are going to be talking about it, which are IPOs, initial public offerings. Today I'm going to break down what are IPOs, essentially what is the process which goes into an IPO and why they are considered so important, not just for the companies but in our current times even by the smaller retail investors too, and what is the whole, can almost say, the menace which is going behind the IPOs as such, and the frenzy of activities which is going around it. So to start off with, let's just start with what are IPOs essentially. An IPO is essentially, as I said initially, an initial public offering when a company wants to go public and be listed on a certain stock exchange. Now it's not necessary that it is, for example in our Indian case, National Stock Exchange, NSE, or Bombay Stock Exchange, BSE. In fact, it could be any other stock exchange too. There are state-wise and local stock exchanges too. Like in Saurashtra, we have one stock exchange too. So it could be any stock exchange where they want to. If they want to list overseas, that is also very much possible for them, and they can go ahead and list overseas, like in the Australian, American market, Australian, European, wherever they would want to. But essentially, it's when a public, when in the public sphere, the company would want to raise money from that public, and they would want to make sure that they are able to fund their operations, and at the same time give some of their investors an exit too, especially in the modern arenas where we have many of the companies being funded by venture capitalists who often want to get an exit, especially when the company gets public. So now, with this being broken down, I will go into the venture capital part furthermore, because the fact is that it's not just that the company is getting all the money. In fact, there is a case of primary and secondary issue of shares too here. So the primary issue of shares will usually go to the company. The secondary issue of shares is what goes to the shareholders who are selling their stake, because it's not always that the money goes into the company directly. Many a times there will be shareholders, and that is why the shareholders will also get their money, often selling their whole stake or some part of their stake, especially when the company goes public, because they are mostly positive about the valuations, and they know that they are going to get a handsome return on their initial investment which they had made, depending on the period of time. It could be 10 years ago or 6 months ago too. You never know. In these days, it depends really on the company and on the market conditions, what type of a return an investor will get, especially during an IPO. So now, while you are applying for IPOs, I am going to cover this from a retail investor's perspective. You will often have to apply in lots. Now that depends on the price at which the company has set their each share, and depending on that, the shares in a lot will be decided. Often it is 13 or 14 shares, and thereafter it will multiply. So either in one lot will have 13 or 14 shares. Mostly it could even be 12. It depends mainly on the price. But one lot is usually around 13,900 to 14,900 rupees, and then further in multiples of that. So once that is done, it is usually very easy. Either you apply it through UPI or through your normal stockbroker. There are many options, and I'm pretty sure most of you watching this are already aware of the process of applying for an IPO, but I'm just covering it for better clarity. So once that is done, a company, your funds are frozen. But again, a company is mainly looking to raise funds for their operations. And it's not just operations too. Of course, the main purpose is that, but along with being a public company, there is a responsibility, because now you are adding more shareholders, like us retail investors, which is why it is often said, whenever you list on the stock exchange, you have to grow up, you have to get yourself oriented mainly towards profitability, at least if not directly, in the short term too. Like at least 1 or 2 years after listing, you need to show some signs of profitability, otherwise the shareholders are not going to reward you. And that is why we are often seeing many of the companies, at least on the American front, actually taking a beating for that. Like if they don't deliver on the promises, either on growth or either on profitability, they do take that setback in terms of not getting that proper response from the shareholders. And that theme might soon apply in India too, which is why I wanted to make this video. It's not just that these are IPOs and it's a quick way to make a buck. Fact is that anyone who is investing, who is putting their money in an IPO, is investing in that company. It's of paramount importance that they know what the company is doing, what are their financials, are they profitable or are they still on a path to profitability, are they loss making and are not going to be making any profits, what are their growth prospects, are they in a sunrise industry or a sunrise industry or a sundown industry, basically in a growing industry or in a declining industry. Do they have the right management at the helm of the affairs? Many things, probably even government policy. There are a multitude of factors which needs to be considered before you apply for IPO, and this majorly applies to even buying stocks or even a mutual fund for that matter, especially if it is a focused mutual fund. So if you are buying or if you are just applying for an IPO, is a sincere request that you do all the research with regards to this aspect, because the fact is that just going by a popular name and applying for that IPO, you might get lucky once or twice, but you are not going to get lucky all the time. Which is why please always do a research, especially because it's money which you are playing with. It's not just any random game. It might seem gamified, but it's really not. So please be careful with the money which you are applying, especially in this IPO, because frankly some things are out of our control and anything could be possible. So make sure that you are as well researched as possible on a multitude of factors, like I had stated before, as anything like this could apply to any company and market could look at either one of those facts. So that is why the IPOs are not just a way to make a quick buck, but they are rather to support a company's mission, their vision, their objective. Because the fact is that shows your willingness to get in early into the company's prospects, because you believe in them from day one. You are ready to support them, and that is why, because you are ready to support them, you are applying for their shares earlier. And if you apply for their shares earlier and you are positive about the prospects going forward, you will certainly reap the rewards. See, it's a certain kind of a process. Basically, you are basically having some foresight about a company's future, where you know that if I invest in this company right now, I'm going to be not just rewarded on the listing day, but in the long term too. It's essentially about supporting a company rather than just ensuring that you are making a quick buck, because that is, again, as I said previously, it's not going to happen always. You need to make sure that you are researching. And of course, I need to talk about this part, but nowadays it's not even guaranteed that you will get a lot, because the fact is that there are huge oversubscription numbers which are taking place. So it's really difficult to even get an IPO these days. It really depends on your luck and the overall subscription numbers. If they are less, then certainly. Like for example, if you would have applied for a Paytm IPO, you could have gotten it, that because the subscription numbers for that were quite less because of its large issue size there was. But for example, an IPO like Sagachi Industries, which saw huge oversubscription numbers and a record listing day profit too. So the fact is that don't just go by the fact that, oh, this is a hot name and I need to invest in it. Don't. We have already seen with what is going down with Paytm, and it's not the first example. We have seen examples previously, and this does not only apply for IPOs but also for any shares which are listed currently too. So make sure you are aware of what you are actually putting your money behind. Make sure you are well researched, well aware of the risks, of the positive factors too going behind your investment, and then accordingly go ahead and apply and reap the rewards of making an early investment. So thank you guys so much for watching. This is a bit of a different video, but considering the current scenario, I thought of making this. It was pretty unplanned as such, no points, just coming straight to the camera and talking. But yeah, considering the current scenario, I think I had to address this point, as I've seen many people around me just going by the brand name and having memes and all, and that is great, making sure that retail investors are more up, like they are involved, but the fact is that they need to be more well researched about what they are putting their money behind, and not just doing it for the sake of it or for making a quick buck. Anyways, thank you so much for watching. Please do support the channel and share this video with all your friends, family. I will really appreciate it, and that will allow me and encourage me to put out more videos. Do share your thoughts down in the comments. I certainly do read them if there are any, and that again helps me improve my future videos and address some of the topics which you might want me to talk about. So do leave your thoughts down below, and I'll see you guys later. Thank you so much for watching.